Hi everyone. Today is Wednesday, April the 30th. It is the last trading day of April. I think 30 days to September, April. Yep, absolutely. And the nursery rhymes that stay with us forever. My name is Anne Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Ranges have been pretty tight. Opening range yesterday was pretty wide, but we are looking at 3 days of megaphone behavior in the E-mini S&P. So what are we staring down? Again, I want you to be able to do this on your own, so it's very routinized. First thing we do, we measure the opening range of the Globex. That is 6 p.m. Eastern to 7 p.m. Eastern. Helps us define the range. Then we're going to look at trend. Trend is up to flat. We've got a lot of candlesticks retracing each other, and if we had a volume profile in here, we would see a fair bit of volume accumulating in this region. A lot of folks looking at breakouts, but my thought is resolution is coming, yes, but momentum is suggesting that we are still in a compression mode, and that's where we're going to sit with things for a bit. When we choose a long in these kinds of formations, we want to look for the dips that are into buy zones. When we take a short, we are looking at resistance levels that will take us into near-term sell zones. If per happenstance we can break outside the opening range of this current formation, we would want to go long above 55.83 or short at 55.83 if we think that price action has got legs downward. Because it's so sideways, you literally can trade from the bottom of one edge to the top of the other, or the break of one edge from the top to the bottom. Very sideways. This is more of an advanced trading event simply because trend and momentum are not saying the same thing, and we've had 3 days of megaphones. So if you're thinking to yourself, hey, I'm going to trade the top for a short of the prior day and the bottom for a long of the prior day, you're going to miss the bottom move, more than likely, for the bounce, and you're going to get blown out if you decide you're going to short at the top if your stop is not wide enough. So what you need to do here is wait for the failure of price before you decide to go short. That is a look above and fail, or holding, look below, which is below the low of the opening tick of the prior day, and fail. It sends us back into trend. My thought is I really like the way this motion looks overall because I like sideways charts. We are inside of the trading day prior, but our opening range formation tells us that shorts have engaged into support, and that first support line is an old implied volatility move at 55.54. If you had taken the short at the failure to get above the opening range high at 55.80 or so, this would be the first place that you would try to take some profit and then move your stop down to the base of the opening range because shorts are still counter trend. Okay, and you're going to be hit with buying pressure every single day of this megaphone. We've gotten higher lows. We've also gotten higher highs. So trend is clearly up. You want to be very careful about motion overall. Wow, I spent a lot of time there. Let's go to the NQ. Same sort of structure, right? 3 days of megaphones telling you that although it's ranging, there's enough of a move outside of the range to blow out the shorts that are saying, hey, I'm going to short the top, right? Not a good plan. All right, it is still bullish. Higher lows, higher highs, particularly on the 1 hour. This is a prior expected move in the NQ here. Again, here's the opening range short. Remember, you want to wait for it to confirm that it's heading inside of that opening range. The short opened up at 19,614. First target we just hit here at 19,492. The next target, opening range low of yesterday, and I don't have that number in there. So there we are, right around that 19,453 zone. Could it continue? Yes, we've got a little bit of volatility expansion in general, but things kind of holding steady, waiting for something. In the meantime, we know that the shorts can give us some nice trades, but because we're trending long under a tight compression momentum, we're going to see buyers underneath here that force prices further to the north. Taking a look at the YM, my thought is this is still very, very bullish. Volatility is 30 days here in the YM, so we can't really see very much of what's going on in general other than dips or buys. So where would the next dip be? And my suspicion is the top of yesterday's opening range if it dips below. Otherwise, it's going to be the closing range, the high of the range of a day prior. That's what these yellow lines mean. That's the 1 hour open and close. You know, we've seen it somewhere before. Okay, so that's what we're staring down. I do believe a bigger move is coming, but taking a look at the Dow, it's still bullish. Dips or buys, and you know, if it were to break this trend that it had in the pre-market, that wouldn't be great, but it's still going to be a buy zone, and that's around 40,470. I do expect range expansion in the near term. Something's cooking. Don't know what's going to do it, but the signals say that dips are buy zones. And so whatever news you're reading, just remember the charts are the only things that don't have an agenda of their own that's not very obvious. Okay? So, and if it's not obvious, we don't trade. These opening ranges on Bitcoin, and it's micro Bitcoin here because we are trading those formations, they've been extremely wide. Look at what's happening to this chart. Lower highs, higher lows. So it is compressing for a move in one direction or another. 2-day implied volatility has targets upside at 97,000. 1-day implied volatility has us almost up at the target already at 96,101. Okay, if it breaks to the north, we're likely to see, trouble maybe at that compression area, 96,480. That looks like relative resistance right now, but we're still making higher lows. So the thought is, if we can get down to 94,750 and have a look below and fail like it did, it's going to be another bounce zone. Puts us in a sideways patch. All right, let's go to oil. Oil is continuing its ride down. Yesterday, it went right into the 2-day implied volatility. What this is telling me is that the traders are not hitting the volatility marks. They're expanding outside of them. So this is something fairly interesting, right? If we're expanding outside of the volatility, look at how sharp trend is. Trend is very sharp. Now, my thought is that the mid-50s are where the price action should end up, but we had a big morning spike at 5 a.m., took us to the low of the opening range candlestick, and so this tells me the following. If I can come back here into 59.30, which is the implied measured move for the entire day, that is going to give me a double bottom if it has a look below and fail, and the price action will try to come back into this area. Today, we've got the EIA report. I have no idea what's happening here, but I can say that the administration is trying to attack inflation through the cost of WTI, West Texas Intermediate. All right. Highs up into the area, 61 is the implied volatility measured move. That's also where the 50 simple moving average is. And below the 2-day marker is 58.26. Bounces are sell zones here. Very clear. What's very interesting is that momentum moved up really sharply on this one candlestick, but we're going to need to see a bottoming formation because momentum has been so low. And that's not going to happen without a battle zone somewhere around here, in my mind. Okay, so we're looking for buying areas around 59.32, selling areas around 61, and pretty much anything goes in between, although I do like the short at the top of the range at $60.30. Love the fade that's actually occurring here in the ES and the NQ. Absolutely fantastic. I've been short. Really want to be able to cover that pretty soon. Let's take a look at gold. Actually, I'm going to flatten that right now because I want to pay attention to what I'm doing here. Gold, big bounce. Let's see what happens to the dollar. I want to look at that on my other charts. Hello. What have we got? Dollar pretty sideways at about 99. It's holding off the bottom, but again, the weak dollar could easily help us in terms of export functions. Okay, so take a look at this. Measured move, implied volatility, opening range fairly wide, bouncing right off of the 2-day implied volatility move. Absolutely right off of it. I drew these probably 35, 40 minutes ago. Came right into the number and now bouncing very sharply. What is this trend? If you go, I have no idea, that's the right answer because the trend is sideways. Look at the range. We're caught in this pocket. Now, it is my suspicion that we are headed probably $300 to $400 lower, but this is an oversold bounce. And so what are we going to do? Are we underneath the 50? Yes. Are we underneath the 14? Yes. Where is heavy congestion? Up here at 33.16. And so the bounce action event there tells us, hey, bounces are very likely sell zones into the low of the opening range, $3,321. We are now choking around the first measure, the 3,297, that's the daily implied volatility move. So for the entire day, it's moved the whole amount. So we could end up chopping around here. I don't believe that there are any very good trade setups right here unless we bounce into the congestion zone near 33.20 and then we rotate back down. First stop, 3,297. Second stop, 3278. I am bearish on this formation at this current juncture. Let's go to SPY. Beautiful rotation down into the SPY. Here's the opening range. The opening range of yesterday, or excuse me, day before yesterday and yesterday are very close to the same size. So what we've got now, we still have higher highs. We still have higher lows. We've come in a reversion to the mean. The first volatility move says that the target for this downward formation should be about $548.20, $548.20. Here's the thing. The opening range high from how many days ago is that? Let me change this color. It says 549.78. That's a lot of congestion. And then on top of that, we have the low of that opening range at 548.50. My thought is that it gives us stumbling blocks. Everybody sees the 50, so they're going to try and start buying here, right? So dips are buy zones. Ideally, I would like to see a look below my implied volatility move and a fail, that is the move back upward into the space that will take me long. But trend is up, momentum is up, trend is up, momentum is flat in the neutral zone. This arc here tells us that we're just hunting for a support zone. Notice the wicks, they can be quite wide, so pay attention to that. and take care of your risk management. It is very important. Lastly, we take a look at the cues. Tight opening range, almost the same as yesterday and the day before. Well past below the 50 simple moving average. This opening range, remember, if we fail to test above the opening range, or we have a look above and fail, it's going to be a rotation into support. Could the support be higher? Yes. Could the support be lower? Yes. But the setup is, can I fail to get out of the high of this opening range? That's going to give me the short, or you can simply take the short at the break of the low of the opening range with your stop at the top. I like to manage risk first, so I will let a trade go by me if it doesn't allow me to pick up the trade where I want it. Very sideways motion here, downward flow, but look at where it's coming into. This low edge of the opening range from 1 to 3 days ago. It came right into it just as we were looking at it, and it's bouncing. So these opening range hours are incredibly important. Incredibly important. Trend is up, so you know they're going to try and bounce, but you need to let the chart settle down. Let the traders come in and show you the look below and fail if you want to trade that lasts more than 3 minutes. Okay? And so you can see them battling to hold this line. All right, that's it for me, folks. Hopefully, with this new trade design setup, I'm actually giving you a way to take any chart that you're looking at and figure out your implied volatility moves, your opening range, and where you want targets to go. If you don't have implied volatility from your option chains, you can simply mark off areas of the prior opening range candlesticks and use those as your targets and walk them down or walk them up in direction of trend. All right, good luck, and I'll see you all at the Midday Moneyball report.